Okay, we're recording. Um, so good. You guys can hear me. All right. So today's talk is arbitrage, which is a word that I couldn't even pronounce 2 months ago. For real. It took me a few weeks of practicing to get that word, arbitrage. So basically, the concept of arbitrage is pretty fucking simple. You buy something somewhere at a low price, you sell it somewhere else at a higher price. So the value of the thing you're buying, in this case, a digital currency, a coin or a token, hasn't actually changed, relative to where it was buying and selling at the exchange, except one place has it more. Now, there are a lot of dynamics that can go into this, and I want to make it clear, I am not an arbitrage expert by any means. This is not like I built my career doing arbitrage. There are people who are excellent at this, who just essentially set up, and there are places you can look for arbitrage too. They have like a, aggregate places where you can go and see where the big differences are. So there's a bunch of these. And if you were around a few weeks ago, I spoke about salt arbitrage. And this is a little bit different than just regular exchange arbitrage in the sense that you buy something on the exchange, in this case, a salt token, and then it's internally valued at right now about 3 times as much in the Salt platform. Salt is a platform where you take loans, you get loans, you leverage your crypto as collateral, you pay off the loans in Salt. Initially, it was supposed to be just the interest, but now you can do the principal and interest if you pay on the monthly plan. So I posted something last night. I just, bear with me while I actually grab this again, because this is very important for people. Here it is. This is really important for people to understand what's going on with Salt, because I still think there's a little bit of hesitation from people. And again, this is a very specific play, but I'm going to post this in the voice chat. What I just posted there is the loan terms of someone who got a loan here. Let me just post the Reddit post to it so you can see. This is arbitrage. I just want to go through it. This doesn't have to be arbitrage, but it is. Let me just get to this. I want to make sure I get the whole Reddit post in there, not just the thing. Voice chat text. Okay. So you can look at that while I'm talking just for the next 2-3 minutes. So basically what we're seeing here is someone got a loan through Salt. Here are their payment terms. Here's their interest. There's their collateral. Everything that you would want to see. And you can also see they've deposited, I believe, 22,000 Salt tokens into their Salt lending platform, that's the cost of their loan. Now, this is arbitrage because when they bought these Salt tokens, let's say they bought them today, if we go and look at Binance, and we're going to look at Salt. Salt today is going for $8.17, 700. That's insane, 72,000 Satoshi. Like I said, it's $27.50 inside. Excuse me for coughing. I did something earlier that made me cough. That's a 3 times arbitrage right there, more. Now, there's interest factored in, but what essentially I'm saying is you could go buy all this Salt right now, get a loan from Salt, they deposit it in your bank account, you have cash, which you don't pay taxes on because it's a loan, and you already have the worth of it because you have the Salt token. So that's an example of basic arbitrage. It's a little bit different than just exchange arbitrage. So now, let's talk about some other examples of arbitrage. And I'm not going to post any of these aggregators or things. And again, this is something that you can do. For me, where I would do this is if I already had been accumulating something and I saw an example of arbitrage, that's when I would essentially look to do it. I'm not the type of person who's going to go just invest in a lot of things just because I see a gap there. I actually did this in December with Litecoin. So when Litecoin was shooting up to like over $300, basically from out of nowhere, there was a point where you could buy on Bitrex and Binance Litecoin for significantly cheaper than it was on GDAX. So this was a really easy way just to keep flipping Litecoin, and Litecoin was pretty quick, so you could get it to and from pretty easily. So I was doing that. I mean, it wasn't insane. I think I made like a few $100s, but relative to what I was spending and how easy it was great. I don't really do that stuff anymore because, in case you haven't noticed, especially over the last week, here's Drin is saying this too. XRB, Ray blocks. This was a huge thing. There was a like $4 or $5 difference between the price of the thing. And if you had a bunch of them and if you bought them really at a low price, you could get it. But the exchanges weren't really letting you move them. BitGrow, an example. I didn't try. I actually didn't have any problems with BitGrow when I sold my XRB and moved any of that stuff. It wasn't a problem for me. But I know a lot of people did have problems. But basically, there's a lot of factors to consider if you're planning on doing arbitrage. So I'm going to give you the clearest, let me go here, the cleanest and most clearest example I can of an arbitrage opportunity that existed that I did not take advantage of because of some very specific reasons. So if we go to Venn, our good friend, VeChain on CoinMarketCap, we can, and then go to markets, we can see all of the markets that VeChain is listed on. So there's a few noticeable things right here. Number one, we see on Binance at the top, it's got by far the most volume in the Bitcoin pairing, and then the second most volume in their Ether pairing. So Binance has by far more than 3 times almost, over that, 4 times maybe, the volume as the next closest one, exchange, Huobi. So basically, that's a very important thing. You want to look at the volume that's going on everywhere because, and also Binance also has the BNB coin pairing too, and that's another $2 million spout. So the volume becomes a very important thing because if you go down, let's look here. Let's look at Ether Delta. The price of Venn on Ether Delta is $6.91. The price on Binance on this coin market thing is $5.89. That's a huge spread. That's over $1. It's a really big difference. If I were to kick all of my Venn over to Ether Delta and sell it all there, I'd make out like a bandit. Furthermore, if I took those profit, sent it back to Binance, bought more, just rinse and repeat, I theoretically could make a lot of money today. However, the most important thing to look at here, or a very important factor, is the volume. In the last 24 hours and just overall percentage volume. The volume over the last 24 hours on Ether Delta is about $12,300. On Cryptos, which also has a very high price, it is $13,000. So that's nothing, right? The volume on Binance is $59 million. Like there's no one selling Venn on these other places. So I'm going to point out one that was actually, I was on both exchanges. I could have done this relatively easy. Venn right now is an ERC20 token, so you can send it relatively quickly back and forth. But one that existed was Binance to KuCoin. Now, KuCoin in this chart, volume excluded, no trading fees. Listen, don't pay attention to that. What I do know is there's usually a gap. It's usually more expensive on KuCoin, even though it's not right now. And I would not feel comfortable sending at least a significant portion of my funds, my Venn stack, to KuCoin. I just wouldn't do it, period. Even for arbitrage. Even if I knew if all went according to plan, you could make $30,000 given the volume or lack of transparency on the volume with KuCoin, I'm not doing that shit. So it's not worth it to me. However, if there is a legitimate arbitrage, possibility, and you really can get this for a better price, you may want to explore that. Maybe start small with like $100, $200, something like that, to see if you can actually make a difference when you're sending back and forth. Now, granted, this is almost the exact approach. This is not a holding approach, right? This is something where you're legitimately going in and going to be flipping this back and forth, back and forth, back and forth until this gap closes between the prices. This is basically why I keep recommending buying Salt. This is an arbitrage opportunity that exists now. If you're in here, make sure to mute yourself, please. So basically, this is something that will continue to exist until more and more loans are fulfilled and people keep doing arbitrage with Salt. So that's why I keep saying Salt is almost a guarantee 3 times in the dollar price right now in the next month or so. And, who knows how much it'll go up in Satoshis relative to Bitcoin. My point is, this is going to happen. I know it's not fun it's like a weird thing to hear from someone when I say, I guarantee this is going to go up 2 to 3 times. Like, that should instill some level of fear in you because, it's not normal that someone would have that knowledge. Well, why wouldn't all your money be in Salt, you might be asking? Well, I have a decent Salt stack, I also have Bitcoin that I can use as collateral, and I have a loan application out, and I absolutely will be doing salt arbitrage. The reason more of my money isn't in there is I like Venn better. I think the proof of access and the potential for the actual business is better. I think salt, if you were 50-50 Venn salt, you're going to be really fucking happy in a year. Let me put it like that. So the question is from Drin. So buy salt, get a loan, and get fiat. Then what's the next step? Well, you have two options. One is that fiat you got is not taxed because it's a loan. So you can do whatever the fuck you want with it. If you're doing arbitrage, you would go and buy more salt if the gap is still lower, right? You can use the salt to pay off your loan. So you would keep doing this and then apply for another loan. And you essentially are buying $1 for 33 cents right now, right? And not paying taxes on your purchase. This is going to close. As soon as regular people like me are getting their $10,000, $15,000, $20,000 loans processed, this shit is going to close right away. Now, there's not a hard cap on what salt limits the coin's worth. That's going to go up, probably be $50 to $100 at some point this year. This is why I'm saying you could go up 10 times, even though right now the internal value is only $27.50. So this is absolutely going to happen. This is a dynamic that is basically built into the business model of salt, and why wouldn't you'll see. I don't know. It's like it's one of those things that if you investigate salt's white paper, I've been a salt holder since about August-ish. So you can basically delve into this yourself. There's a lot of FUD, fear, uncertainty, doubt going on in the salt space because no, this is not a Ponzi scheme at all. So the question is this a Ponzi scheme? People buy in, it goes up, No, it's not, because it's a loan. This is, you don't have to do arbitrage with salt. Plus, once the gap closes, you won't be able to do arbitrage because you're going to have to pay interest. It's a loan, right? You're also going to have collateral. A Ponzi scheme would be that your stack gets bigger as more people under you buy in. It has really nothing to do with Salt's business model. Their business model is essentially they're partnering with banks. They're getting completely cleared by all the institutions and organizations that need to process loans. And they basically guarantee lenders get their money back. And they provide loans to people who have crypto assets who maybe don't have great credit or just don't want to go through a traditional banking system. So there's a huge demand for this, and there will continue to. Let's say I have 100 Bitcoin right now. I want a $300,000 loan to buy a house. I can go to my bank and I can say, I got 100 Bitcoin right now. Will you give me a loan for $300,000? I'll be like, get the fuck out of here. We're not using your fake money, dumbass. We're not going to use that shit. Now, soon they will. They'll be like, oh shit, this is a real asset. We can probably get a steal on this. But for the most part, the bank isn't going to do that. A financial institution isn't going to do that. A person, for the most part, isn't going to do that. But you go to Salt and you say, hey, I got 100 Bitcoin. I'd like to put 50 Bitcoin up as collateral. Can I get this much a loan? Just at Salt, rather. And they'll say, sure, yeah, go ahead. Go through the process. Eventually, it's going to be an automated process. They are manually and meticulously processing loans right now. I'm not that frustrated. I'm a little frustrated my loan hasn't processed more quickly, but I understand why it hasn't. They're literally fulfilling like what we see here, a $450,000 loan, huge loans. They will get to people like us. I don't know how big the arbitrage opportunity will be, but I don't really care. I already hold enough SALT tokens to pay off whatever loan I've requested. You can too. You can go buy the SALT right now, join their membership program, apply for a loan, send your SALT over there when you get your loan and do the exact same thing. It's not like it's closed yet. Now, here's part of the reason that this arbitrage opportunity, a lot of people are upset about this in the SALT Reddits and all these things because they're day traders. They're trying to flip quick profits. They don't like the lack of communication from SALT. They don't like that they can't get clear in writing confirmation that this arbitrage exists from SALT, which they shouldn't do. That would not be a good business decision or just really a good ethical decision to blast that out. It would seem like not a good thing to do. So they're upset, and people who buy into SALT thinking it's going to triple in a week once the loan's processed and it doesn't get all salty. pun not intended, and they realistically just start spreading all these rumors. Oh, this is fake. This isn't real. You can't really do that. It's too good to be true. It's like, okay, well, hold on to it and see what happens to those of us who absolutely know it's a real thing. It's literally their business. Like, this is their business. This is what they exist for. They're first in the space to do this. There are two other competitors that are, relatively shaping up to be a lending platform. One would be ETHLend, LEND, as the ticker symbol, and the other would be Elixir, ELIX, as the ticker symbol. And yeah, great. If these lending platforms shape up and are good and they pass muster in the respective countries they'd be using in, if they had to, wonderful. Salt's there. It's happening already. Started at the beginning of the month. Will continue to happen. Absolutely an arbitrage example. So getting back to the general concept of arbitrage, what you're going to be doing is purchasing somewhere. I'm not, just in case you were hoping I would give out specific arbitrage signals in this call, I'm not going to be doing that. First of all, this is being recorded. If I gave out a signal that for arbitrage and it didn't actually exist, then a lot of people would at least waste their time looking up to see if it happened. And second of all, it's not worth it. There's plenty of places you can go to find out. There are bots, there are algorithms, there's everything that scans the web to see what potential arbitrage opportunities to exist. It's up to you if you want to do that. I, again, use the general premise that I don't want to do anything with arbitrage, anything with buying, anything with flipping, unless I at least know what it is, right? At least I've seen it before. I have some semblance of an idea, but I'm not just going to blindly do arbitrage. I'm not saying it can't work for you, but let's give it a risky side of arbitrage. Number one, let's say you buy something for the arbitrage, you buy it, you send it to the other exchange where you can sell it for more. Let's say the price just goes down full sale, both, right? You're left holding the bag of this stuff. Now, in crypto, you're probably not holding that bag for a long time, especially at this point in time, because, the general rule is unless it goes to zero. Look at Tron. How many of us thought Tron TRX was done 2.5 weeks ago? Just done. Like, literally cratered to like a quarter of its value at its peak. It doubled like a few days later. So this stuff isn't going to zero now. In the future, it could as projects crash and burn, definitely. But worst case scenario, you're left holding a bag. I'd rather hold a bag of something I know what it is, right? That's my general, premise on all of this stuff. At least if I know what it is, I'm not going to freak out and sell the shit. Like, for instance, when I took a loss on GVT this past week when Bitcoin dipped to get more VEN and ICX, I knew when to sell it. I knew that it was okay taking the losses when I took them because I knew what it was. I knew, if I wanted to get back on, I'd probably have that opportunity. I realized how much I was actually losing relative to how much I'd be getting and how much more that would be worth. So if you know what you're doing and you know what you're getting, you're going to be able to figure out those decisions. Worst case scenario is you just get some random signal. Maybe I posted something in here. Someone else posted something in here. You get it. It does the opposite of what was supposed to happen. You freak out because you don't know anything that's going on, and then you sell the shit. And then like 3 days later, because people who knew what it was, it goes back up, and you're like, fuck. Just to be clear, I've done this like probably a dozen times, if not more. I mean, it's just a natural learning experience, but you can mitigate those types of experiences by understanding what you're getting. Now, I saw someone post, I think it was in this group, it was definitely in another group, the importance of reading white papers and doing your research before getting everything. And of course, that's true. I'm going to let you in on this isn't a secret. I have not read every white paper of every coin I invested in. And even the coins I hold now, I haven't read ICX's white paper, but I fundamentally understand what it is and what its place in the market is and what it's going to be or what I think it's going to be. So I'm not one of these people who's going to be an asshole and tell you have to read the white paper, and if you don't, you're just throwing darts at it. Well, sure. But if you can understand what's going on and the dynamics of what you're buying, it's okay not to read the white paper. Now, certainly, if this is a project that's going to become or an investment that's become a large part of your portfolio, I might want to read the white paper. Might be a good idea to understand what you're getting. But other than that, like, you don't let people bully you to one polarity or the other. This happens with everything, right? Politics. It doesn't matter what it is, art, media. Someone is always going to try to convince you that their opinion is the best, they know the best, and this other opinion, because it's on the other side, is wrong. And I think there are certain times we have clear right and wrongs. This is a better buy than the other, sure. But if you can just kind of keep a level head and recognize that maybe you don't have to read every white paper, but you also shouldn't just blindly listen to people, then maybe you find kind of a nice little balance place in the middle where you figure out your own investing style. Because anyone trying to tell you that they have the answers for all investors are just bullshitting you, right? If they did, even if this worked in technical analysis, we would all have all of the information to make the best calls at the right time. And what would that do to the market? It wouldn't work like that. Then we would have to have some new paradigm for it to work, because things don't just go up in lockstep and down in lockstep. There's dynamics here that are totally at play that, are contingent on how we all move together. So my main point is don't get too, dedicated or attached to a certain way of investing in this space, especially right now. Like, I'm sure Warren Buffett, really knows what the fuck he's doing in the stock market, right? Berkshire Hathaway is like $270,000 a share. But in this is so volatile. This is so different. I think generally, if you just kind of have some idea what's going on, you're ahead of most of the people. Okay, so now I'm going to open this up for any arbitrage specific questions. I mean, it's a pretty simple concept. The only places I go to really look at arbitrage, I don't use the aggregators because I don't actively do this. I find something that I think may work for medium or long term and then do it. But I just go to CoinMarketCap. If there's a coin I'm interested in, or I got a tip that an arbitrage opportunity existed, then I'll go and I'll look. I'll look on both exchanges. Also, I don't go out of my way to sign up for new exchanges just because of arbitrage possibilities. A lot of new exchanges will try to lure you in by showing these prices that are very low, and it might even be them internally selling it, and then you go and look at the volume and there's nothing there. So all of a sudden you may be signed up for like Coben Hood, and it's like, oh, this isn't real. This isn't a real thing that's going on here. So I'm not saying Coben Hood is bad either. There's plenty of valid things there, but there's a lot of things that aren't as good as they seem. That said, there are some things that are as good as they seem. So that's arbitrage. It's a really short overview of it. I'll try to, I'll post signals in here when there is something I think is worthwhile jumping on. But generally, you should be aware that this exists. And especially in, an unregulated market, there is going to be different prices on different exchanges. So with that said, any questions related to arbitrage, you put in the voice chat text channel and I'll answer there. Otherwise, we can do maybe 5-10 minutes of general questions. And if not, then we will just wrap it up. I'll give a 20-second countdown. So you have 20 seconds to decide. I'm not going to count it out, but in my head, I'm doing it. This is part of the counter. We good? Okay. Well, that's it for today's talk. This is going to be recorded. I'll post it either today or tomorrow. Simple stuff. Just pay attention. Markets, I don't want to say it's recovering, to be honest. I think we're going to see a little action here, but we'll see. So happy trading. Is someone typing? Are people typing? Denial. It's not denial. How long ago did I apply for SALT? I put my SALT loan in as soon as they opened applications, which I believe was the end of December. And I've been a member since August, I want to say. I think August. Maybe September? Pretty sure August. So, yeah, you're going to be behind me in line if your loan is less than mine, because I've been a member longer. That said, if your loan is more than mine, you'll probably jump ahead of me. Again, I wouldn't fuck with SALT if you don't have existing crypto assets to use, number one. Number two, can't purchase the amount of SALT tokens before your loan comes through, because the worst case scenario is you apply for a loan, you get the loan, and then SALT costs exactly the same amount as you bought it for, plus you have to pay interest. So those are the two conditions. And the other caveat I pointed out in the last call, you have to be or have access to a U.S. citizen and bank account. Right now, they're not doing international loans. I'm sure they will. I'm positive they will, but they're not. And they're being very meticulous about this, which I much prefer than just opening the floodgates and having problems emerge, because that's not how you build a business. So SALT, and we'll probably do another SALT. I mean, things are happening with SALT constantly. So once I get my loan, I'll be sure to walk everyone through the process of how that works. And we'll just keep updating on that. Because, I've held on to SALT through thick and thin. And just to be clear, I think I haven't looked in dollars. But I imagine if I looked in dollars, I'm easily down $2,000-3,000 in salt since I bought it. I bought some very expensive salt, around $12, just because I was certain the loan payments were going to come out. So like, I'm holding on to pretty big bags of it, but at least those bags can be used to pay 3 times their worth right now. So maybe my portfolio says I'm only holding $8,000-9,000 worth of salt. I know that's 27 if I wanted it to be. And again, don't forget the collateral part of that. You have to have collateral. You don't have to, but your loan rates are going to be better. It's a very important part of any loan. Okay, that's it. We're going to wrap it up, and I'll see you guys probably not over the weekend, but next week I'll line up some calls, and we will do those. No problem on the talk. I'll see you guys later.